How to invest in Sila Nanotechnologies stock. The stereotype of the correct investor have many of the identical qualities as the Mr. Spock on the Star Trek. Mr. Spock appears at happenings in the logical and objective as well as follow the rational plan in creating a solution to a crisis. It would be pleasant to formulate the in-depth stock market investing approach, find the stock market situation that imply that his strategy can make money, and then and only then might it execute. However, at last it will be vital to understand that Mr. Spock is really a fictional feature. And even if it was genuine, he's a Vulcan, he is not human. Investors are humans, but as well individuals and stock market are human, and they does not always behave rationally. Certainly they tend to be driven by worry, hope and greed, and thus predicting stock market traits is verified much more difficult than space travel. In the real world, human beings are emotional. Feelings rule in all stock market timing approach. The judgment you need to do but is either you control your feelings in order to trade decisively and beneficially, or let your sentiments rule you. It does not do you any excellent to be overly disappointed when possess a loss, or overly euphoric when you have a huge achieve. Extreme pleasant and unpleasant emotions could be very distracting. If you are angry, frustrated or concerned, you may not manage to focus on sticking to stock market timing strategy. Your focus might be somewhere else, and these negative sentiments may cause to wrong at normally expensive investing decisions. The other extreme, it's not a much wise to feel elated or euphoric. Very pleasant feelings are in general the flip side of the very unpleasant sentiments. That's it is mostly these traders who have extremely unpleasant feelings when faced with setbacks, which have also an extremely positive experience, sentiments of euphoria when suddenly faced with an enormous profit. At reasonable levels, pleasant sentiments are motivating, but in extreme cases they might be associated with impulsive judgments such as leaving a place without superior cause or abandon the strategy of risk control. But it is almost impossible to be sentimentless. Humans are sentimental by nature. It's always difficult to understand absolutely no feeling. In all chance closer than we were able to reach a neutral emotional state, it is indifference. So what is the best approach to construct an optimal sentimental state? We know that negative feelings like anxiety, anger and disappointment may be harmful. And we know that euphoria often results in more confidence in stock market timing mistakes. Instead of respond to setbacks from frustration or anxiety, one can come up to the setback from a way of the practical optimism. Fails are part of the game. There's no way over them. Market traders must concentrate on the goal of creating successful returns over the long term, not the daily or even weekly ups and downs of markets. Not at all underestimate the ability of emotions. Extreme optimism or else pessimism might interfere your objectives, but by approaching problems with the realistic sense of the optimism, you might stay the course, stick with the stock market trading strategy and produce outstanding market timing gains over the years.